Hey everybody, this is Brent from Wolf on Wall Street Trade with a market update for the week ending September 6, 2019. And we're going to take a look and see what might be coming up in the next week or so with the market. But before we look forward, we're going to look back. I'm going to play you a short clip from last weekend's video. This was posted Sunday, September 1st, before this holiday shortened week. And I will post a link to this video if you want to go back and look at the whole thing in context. So let's get started. I have no objective evidence to say, this is a probability. It's just a gut feeling. So we have this very clear consolidation over the last 4 weeks or through the month of August, as you can see. So I'm watching different traders on Twitter. Now, everybody is posting this. Everybody sees it now on CNBC. The chart master is now showing charts of this consolidation. I think there is a decent probability that because this is so defined, we may see a head fake or a run on stops. This area of resistance here around 29.44, that could get taken out with a move above, get all the bulls to jump in, get all the shorts to cover, and reverse. Okay, so that was my gut feeling coming into the start of this past week. Boom, there it is. We got that move, the shakeout, and potentially a head fake. So first, what is a shakeout? So anybody who's short might say, well, I see this area of resistance. If price breaks through that level, I will buy to cover, and buying to cover is simply buying. That's how you cover a short. Additionally, you'll have longs that have been getting chopped up in this range, and they'll place an order to buy if we get a breakout above that price. So their orders get triggered. And then you have the CTAs or algos that are mechanical trading systems, rules-based. It seems like their levels have been narrowing in this range. So say above a certain level in here, they'll go 100% long. If price falls below a certain level over here, they might go 60% long and dump some of those shares, and you get these big kind of sell-offs like that. That's generally the algos and CTAs getting prices triggered. So everybody who has been getting chopped up in here all of a sudden has all of these stops run. That's the idea. That's kind of what I was looking for. I also thought that there was a pretty good chance that it will be a head fake, which would mean that prices would not hold this breakout, a false or failed breakout. And I covered that at the end of last weekend's video too with an example from small caps. So there's the breakout. Here is the failure of the breakout and a fast reversal. And that is kind of the scenario that I suspected last weekend that we might see, but the first thing we needed was the breakout or the shakeout of all these stops. For me, that's a big opportunity because the measured move hasn't changed, and that measured move target would look something like this. This is unchanged from when this consolidation first started. We have the first leg down and the consolidation. Here's the measured move, and that comes down to about this 2650 area. Now, whether or not it is a false or failed breakout depends on how the probabilities develop from here. It's not just, I think it should be that, or I'm bearish and I want it to be that, or I'm short and I want it to be that. You have to go with the probabilities that the market presents you after this happens. So that's where we are now. So I showed S&P 500 is above the 50-day moving average. That's the same thing for the NASDAQ 100. That's the same thing for the Dow Industrials. But small caps show relative weakness. They did not make it up to this 50-day. They closed below the 200-day on both Thursday and Friday with a bearish engulfing candle here. Let's take a look at S&P futures because there's something else I want to show you real quick. So most of the gains last week were here and here, both in the overnight session. During regular hours, we got very little price movement. Okay, these were all consolidations during the cash market. That causes price to gap up. So we see the gaps here and here. Those were the two big moves. Now, there's nothing wrong with gapping up. That doesn't mean price is bearish in any way, shape, or form. However, the overnight session is thin, illiquid trading. So if I was long, if I was a bull, I would want to see some follow through from this gap and this gap in the cash session. And we didn't see that. So both days we had a gap up and we had consolidation. A gap up, consolidation all of Thursday, and then again all of Friday. This is where the big volume is. This is where the big players transact. And basically, they're not doing very much in the cash session. Now, that doesn't mean that price is going to collapse. It just tells us a little something about the tone of the market. Every night when I post that daily wrap, I talk about the tone and character of the market, not in terms of my opinion, but in terms of evidence. So every night when I do those internals and we look at volume and the price-volume relationship, what we've seen is these up days, especially since about here, have had very low conviction, and that's what we see every night in those internals. Actual evidence, actual proof, not thoughts and feelings and hopes. We can decipher the message of the market in a lot of different assets. So here's one example, crude oil. It had been exceptionally supportive of the stock market coming into last week. WTI Crude has been trading around this 57 area and hitting resistance. It tried to break out above 57 and then came back down. It could not hold that breakout as the S&P 500 did. And if we look at the 3C chart, look what happens these last couple times it has come up to 57. Negative divergence, and especially on this breakout, 3C was going the other direction. This is one asset to watch. Or currencies, here's Aussie dollar. That's the same breakout as the S&P 500. Range, breakout. There are a few other pairs I'm watching like the dollar yen. Here's the range, here's the breakout. Or even more specific on the Asian side, the dollar yuan. If it moves back above this 714 area or so, that gets more risky for stocks. If it moves to a new high, that gets very risky for stocks. Here's the S&P 500 with a proxy for the yuan in white. And you might notice it did not confirm in July, did not make a higher high relative to back here in April, and we have the same thing going on. In fact, it hasn't even moved above the range. And finally, for this video anyway, one of the reasons I thought we might see a failed breakout, and I covered this in last week's video, was 3C. So this is my own indicator. It's not the holy grail of indicators or anything like that. It's just the way I interpret the market, a lens that I view the market through. So when the S&P was making new highs in July, 3C was not confirming those highs. It was negatively diverging, leading into this sell-off. At the low end of the range, 3C had pretty good positive divergences, good energy coming off of those lows. That was not in place over here coming off of this low, leading to this move last week. And as you can see, we got a little bit of a spike here on this initial gap up, but then nothing else. If we take a little bit of a closer look at this week, you'll notice that 3C did not make a higher high with price. Thursday and Friday, it started diverging. So this is not a leading negative divergence like we kind of saw in here. But at this point, it is a relative negative divergence because 3C has not made a higher high. Price has. That doesn't mean that it can't confirm next week. We'll have to see how that goes. So like I said, looking for evidence. Making good decisions in the market is about probabilities. It's not about what I want to happen, what I think should happen, what would be best for my position. We're looking for evidence. We're looking for probabilities. So that's what we will continue to do Monday morning when the market opens. I would like to see a resolution over this next week. That doesn't mean there will be a resolution this next week. I would just like to see that because the market's going to start thinking about the September Federal Reserve or FOMC meeting. And I suspect what will happen then is the market will start getting flat again and not wanting to make too many big moves ahead of that meeting. That meeting is not next week. It is the 18th, so it will fall right about here. We have the shakeout. Do we get the head fake? Evidence, evidence, evidence. Watch stocks. Watch the averages. Watch small caps in particular. S&P sectors. Sensitive ones like transports, regional banks, semiconductors. In commodities, crude oil, copper. In currencies, the dollar yen, the Aussie dollar or the Aussie yen, the dollar yuan. And probably more than anything, what the bond market does, what yields do. Bonds got the same kind of shakeout last week as stocks did. And you can see that move right here with the spike in yields. But look how much yields fell relative to the S&P 500. So they have been making lower highs and lower lows. That is a downtrend. The 10-year yield has to move about 40 basis points to confirm just last week's breakout. If we take a real close look at it, yields actually led up a little bit on Tuesday. And here they are Thursday, Friday, and they are sagging a little bit. So if they kind of go like this and stocks are going like this, that's a short in my book. If stocks go sideways or maybe come down a little bit and we see yields move up, then yields will be confirming the short-term breakout. But you still have that big 40 basis point discrepancy in terms of the bigger picture, the broader picture. This may be one of the best indications you can watch because as the S&P was making new highs over here in July, what were yields doing? They were moving lower, specifically right here And right here, they led prices lower. And what have they been doing in this range with the S&P? Making lower highs, lower highs, lower highs, even with last week's move. So Monday morning, we'll get back to the detective work and figure out what the probabilities are here and where opportunities are. If you liked the video, please give it a thumbs up. I appreciate everybody who did. If you have comments or questions or something that you'd like to see covered in one of the videos, please leave a comment below. Members, just email me as always. Have a great weekend. Members, I will see you on Monday.